Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, December 13th, 2018. Wanted to do a follow-up, do a video on commodities. Before I do that, I'm just going to try to squeeze in an update on the markets here. I just made a post in the trading room showing these charts, and basically, here, let me grab that for you. All right, these are the charts, and I'll get to the live charts here in a second, but by all accounts, by nearly all metrics that I can look at on the charts, these breakdowns look convincing. We broke 165, 165.60ish support there, so there's price support, big gap. The gap's been backfilled, and then some breakdown, two red candles. And what I decided to do, I'm going to give my positions a little more rope. Look, they're probably going to be stopped out. I have my stops just below the lows in NQ. That's all I'm trading right now as far as indexes. And what I'm open to, and even if I'm stopped out, I'll still watch for this. If we somehow manage to reverse and close the day green, we're red right now on QQQ and SPY. As I mentioned, we've had 3 consecutive closes every day so far this week. We've closed green, despite any intraday reversals. The most important thing is each day was green so far. We haven't had that, as I pointed out in this morning's video. We have not seen that since the correction started back in early October. There's not been anything more than 3 consecutive green days in the market, green closes. So we'll watch for that. And my point being, if we get it, it'd be quite bullish to see this. It would be another, I think, a near-term bear trap, and that's what I'm leaning towards. And here's the way I approach this. You might say that's sloppy discipline. There's a breakdown, sell signal, confirmation bias. You're blinded because you're near-term bullish, and I recognize that. But I also, when I factor in risk-reward, I factor two things into a trade: the RR risk-reward ratio and the probability of a trade playing out. So by extending my stops, giving them a little more room, what I'm looking at here is, odds favor that trade will be stopped out. I'm just below the lows on NQ. However, if I favor this bull trap scenario, I think there's a good chance for it. And if it happens, then it would be quite powerful. So this breakdown today, sucking in some more shorts, clearing out some more weak-handed longs that might have, caught a good part of this rally recently, and then it brings in a stronger base of those holding the stocks at this point in time, and it also gives you that fuel you need. We're getting pretty extended near term, so you have that fuel in the form of shorts that are forced to cover. Remember, shorts are the only guaranteed buyers in the stock market. I've talked about that many times in the past. You might talk the bullish talk, how you want to buy Apple, or a fund manager might say, oh yeah, we like Apple. And they might have all intentions to buy it, but they never have to buy it. If something changes and they see something they don't like, you don't have to pull the trigger. That's a long talking the talk. Shorts, when you short a stock, you have to cover. You are a guaranteed buyer. At some point, you have to close out that position. And so what happens is when market starts moving against their positions, they get squeezed out. They start going underwater, and then they must buy the stock. Buying begets more buying, and so on and so forth. So that's it. Again, by the time you watch this video, the market may have another leg down, take out the lows, and we may be going lower. And again, that's based on the technicals, that the chart, the probability is that we will go down, because this is a solid breakdown so far. We're working on the second 60-minute candle there. There's SPY, same thing. You can see I have a price support there, 265.66 on this 15-minute chart that was taken out. Now, one thing to note, I did circle it down here, the PPO trend indicator, which went bullish here, back tested the zero line successfully. That often acts as support on a back test. It's testing it again. So if we get a reversal, you would have a successful defense of that trend indicator, the 9 EMA at the zero line. And again, you'd have a false breakdown, which would give us the fuel, the catalyst that we need to run up and hit the next targets there. So let's get off that. That's 4 minutes spent on the broad markets, and I really wanted to get to commodities for you here. So let's just dive into that. Let's see. Let's start out with crude. I'm going to try to give you these in order of how I like them. Now, crude has been, for the most part, a completely sideways trade. We look at here. Let me do this for you if you're not familiar with the charts. Crude plunged, had one of the biggest plunges in years. going back, this divergent high and the fact that crude was at resistance. I had pointed that out at the time, expecting a reversal there. Had no idea it would be so sharp and so fast, but the divergent high, the long-term resistance right here around 1611 on USO, all that was pointed out at the time. Negative divergence on the weekly chart. So again, the fact that we dropped is not surprising. It was certainly a sharp move, but that's the nature of commodities. You have to know what you're trading. That's paramount to investing. Natural gas, if that didn't teach anybody, what can happen in recent months, and I pointed out in the past, although it was an extreme move, it is the nature of that beast. Certain commodities can move very fast, especially these commodities that you have, things can change, fundamentals can change very quickly. The supply and demand, the production, and so you can see what I'm doing here is I'm showing you rips and dips in crude that make this one, put it in perspective that hey, it doesn't happen all the time, but don't ever underestimate just how much a commodity like, especially energy commodities like natural gas and crude oil, don't ever underestimate how much they can drop in a short order or how fast they can climb. Likewise, so if you're trying to buy oversold or short oversold or overbought, I mean, and that's your only criteria, you can, and you think, okay, well, it's really oversold right here, really oversold here, you can get wiped out. And crude, natural gas, especially recently, has taught a lot of traders that. So now, what happened from there after the sharp drop? Although it was priced in, a drop was priced in the technicals. We had no way to know it would be that sharp and hard. This is about the $50 barrel level on crude oil. This is USO, just an ETN. Hit that level, and for weeks now, we have just been trading in a very sloppy sideways range. But it shows it dropped like a rock, almost a vertical plunge down to that $50 a barrel level, which is a key psychological support level. It always has been for crude, at least for years, and we've traded sideways. So there's not a swing trade to be had yet in crude. We were very oversold when it got there, and again, that's support. But it's been an active trading vehicle, and there may be a swing trade coming. That's why I'm doing this video, starting out here. I prefer to trade crude futures personally, but USO does a very good job of tracking, much better than a lot of the natural gas ETNs and things out there. And so I have a couple different trend lines to watch. None are really great. We'll get to crude futures in a second. And I encourage you, if you are a trader of USO or DWT or any of the leverage ETNs, even if you're not trading crude futures, you can get a free chart. Investing.com will provide you free real-time charts. I like to keep an eye on that because you're going to see the round-the-clock trades, and you can pick up trend lines, support and resistance levels that you don't see on USO because you're looking at 9:30 to 4 p.m. Eastern trades here during regular market hours. So what do I see right now? I see an uptrend line forming. So although we have been trading sideways, at first it was down, down, down. We put in a divergent low here on this hourly chart, 60-minute chart. Although those divergences are not playing out for a rally yet, they were in place, and so far we've made, at least in the near term, higher lows. So this is a level, I went long some CL this morning because we're at support. I'm going to show you also on the 60-minute chart, but this is a level I'm watching on USO. It's not a hard line because there's a few pops above it, but just over 11, called 1110. Look at all the reactions here. Here, let me box it in for you. And again, we're going to line this up with CL. We popped above it, and that level acted as support till we gapped down below it, and we went above it. And you can see, so this is a key level. Support went above, resistance went below, and we also have a downtrend line coming. So now I'm looking and expecting a breakout soon, and I think we can get a nice pop. So that's why I'm leading with this one. It's one of my preferred. And I also want to say this. Lately, we had crude inventories yesterday, and that disconnected this a little bit. They got knocked down after the inventory report. But on earlier this week, I noticed a very strong correlation between crude prices and the stock market. And when you have a big move like this, and we've come down to support, there's not any clear near-term direction on the charts. what happens, crude will trade with economic expectations. So if the market starts to stabilize and go up, well, that shows market participants have confidence now, in the market, and maybe the economic outlook is not turning down so bad. The Fed is starting to be dovish, backing off their aggressive, talk on rates. So that all plays in well to this whole scenario. So I want to say this. This trade will be probably correlated pretty close with the stock market. So if you're trading equities long now and you're long crude, you're probably not as diversified if that correlation continues. Because if stock market takes another big leg down, crude may come down and break down below this range. So let's just look at this chart. This is again CL crude futures. Here's that uptrend line I was showing you on USO, give or take. I didn't draw it perfectly there, but you can see roughly like this. And so that's where you can buy at that trend line. But a break of that would be bearish. Obviously, it's a technical breakdown. And you can see even a better, well-defined trend line coming in here off the highs. And so if crude comes up, here's that boxed area I was showing you. We're either trading on CL, it's at about 52.27, and below that is resistance. Above it is support. Below resistance, pops above. So it seems to be trading in these blocks. And so right now we're coming up. This was an objective long today, but the next objective long will be a break above that level and the downtrend line. And I think that would, it would indicate that we come up back at least the top of that range, and I'm still targeting this area here. This is my preferred target, especially because a breakout here would have longer term bullish implications because it would take out the downtrend line as well, not just this little 52.27 level we've been teeter-tottering back and forth on. So there's some potential targets: 55.26, 56.09. I don't expect crude to explode, so I'm just looking at a quick tactical trade, if you will, a quick swing trade. And, it's been a tricky beast in recent weeks. I've hit or miss quite a bit on this, stopped out on some, successful on others. And you have to recognize it for what it is we're in a sideways trading range. So we may not break out above there. The next trade, if we do get a pop above this level, may only be good for a move up to the top of that range. All right, enough on crude. Again, watch that level. The last couple reactions were a little bit above 52.27, so you may want to wait for a definitive break of this trend line and some impulsive buying, but it comes in not too far above that, so about 52.30, 52.40, somewhere in there. And next up, natural gas. Funny how these charts sometimes are in alignment, sometimes they're not. Same wells usually pull both out of the ground, but they all have their different factors there. One of the big things is storage. You can store crude oil, but nat gas is pipelined. And here you have a big, and I pointed this out in the trading room recently, a lot of inquiries. This was that huge run up, and it blew up at least one hedge fund that was in the headlines, completely blew them up. They were leveraged out using options, and I'm sure it can, caught a lot of traders off guard. It was a big move. But again, I showed a long-term chart, and it doesn't happen often, but it's the nature of beast. So what I said in the trading room recently, I pointed out, and I got a lot of inquiries, that, we were in a triangle pattern. Triangle patterns by nature, your prices are starting to compress, and I said I favored a downside break due to seasonality factors. What I mean by that, I'll have to dig it up. I put up a chart before, and you're going back for years showing seasonality, and you always get a big pop, always, almost without fail. Either late, or I should say early winter, somewhere around November or December usually, or sometimes a big run pop would come in January, February, and it all depends on that year's winter. And other factors as well, supply and demand factors go in, but we get a cold winter, there's a big demand for natural gas, and again, because it's pipelined, it's just demand's going to go up. So it's going to go up in the wintertime, but you don't always know exactly when. And then after that, after the big run up, there's always been a big correction. And so therefore I said when we're in here, my favor the next move being the downside, to the downside, and we did. We broke to the downside. You can see that. So there's your downside break of the triangle. And today we came up for a near back test. This is, again, this morning I did a video. It ended up being too long. This one might be too long. I might have to cut it off here at the energy commodities, and that's what I think I'll do, follow up in the ag commodities. Sorry, I started with the markets because I did want to share my thoughts on the, the fact that although we broke down from those trend lines, that I think we'll get a reversal. I think that's important because that's most of what my focus has been, the broad market. But this was a trading op here, short today. Again, I had to scrap that video and went too long. I started getting off on looking at individual lumber stocks and things like that, and I decided to just scrap it and keep this one shorter. So we're gonna leave it here. Well, before I do that, let me show you where we might be going. Let me move this trend line, this support line down. That was today's low, or the recent low, maybe last night, at just over 404. So almost 405 right there. You can see a reaction low. But again, this is a pretty powerful consolidation triangle. So it would, I think it portends more downside to come, especially if the winter starts to come in a little warmer than expected going forward here. And here's another, this is a different chart. This is investing.com. Again, you can go there, create a free account, create a watch list, and have all these on there. And this is the same triangle pattern. And so you can see a breakdown, back test, which provides some objective short. Support or the next downside target would be this level here that marked it. That's at 4, again, about 4.046. Then down here, next target, 390 or so. And if longer term, if you're willing to ride this one out, but I'm telling you, if you've traded natural gas, you know this. This is a volatile sucker. It can swing double digits in a day, gains or loss, and that's natural gas itself. I know in the trading room, I see a lot of people like to use U-gas and D-gas, which leverage it up 2 or 3 times, I think 3 times. Or if you trade these futures, there's enough leverage in them to get you rich quick or broke in a heartbeat, depending, if you're not, if you're taking too large a position size. But again, so how do you manage that? You just keep your position size small, account for the extra volatility, and at this point in time, right now, unfortunately, and I was hoping to get this video out earlier today when we were back testing. I don't see an objective entry right here because we're coming up on support, but a break below that level would open the door for a move down there to that next target and possibly beyond. So again, you can replicate these charts and just trade strategically off these levels, or tactically, boom, short bounce back to resistance, maybe a bounce back now to this line right here. For 425 or so would provide another short entry. We already back tested the triangle. We'll certainly do it again. I mean, we could go back up in there, but I don't think we'll get it again. So I don't think you'll get it all the way. So I would, if we do bounce back to that 425-ish level, that would probably be the next objective short. But I'm guessing from here we're going to break down below that level and then target that. And as far as percentage moves, you're talking, security on nat gas futures. It's only $5 per contract, but that's a pretty good drop. That's about a 5% drop there, 4.6% from current levels. And again, on U-gas or D-gas, or well, it'd be D-gas if you're shorting it, that's almost 15%.